There's lots of uncertainty throughout the Bitcoin market. We continue to watch the price fluctuate right around $20,000. But the big macro picture, we see the Federal Reserve raising interest rates, and everyone wants to know, how will Bitcoin survive during its first true recessionary period? My hope is that these weekly updates help to answer some of those questions. Now don't forget, this weekly update is now brought to you by FTX US. You can click on the link in the description to learn more. Let's jump right in and start looking at the Bitcoin network itself. We see that Bitcoin's price trading just above $20,000 as of yesterday, up about 1.68%. If we look at the network, we can see that the market cap of Bitcoin now sits just below $400 billion. The inflation rate is just under 2%, and more than 90% of the 21 million Bitcoin is now in the circulating supply. The real exchange volume for Bitcoin sits at $4.6 billion in the last 24 hours, and the miners have been paid just under $19 million to continue to secure the Bitcoin network. We see that Bitcoin is down 70% since the all-time high of $69,000 back in November. If we then take a look, Bitcoin is down 36% over the last 12 months, gold and the S&P down as well. But over any other time period, 2 to 10 years, Bitcoin has absolutely dominated these other assets. Bitcoin closing history shows us that for 547 days, it's traded above where we are today. And if you bought Bitcoin at any point over 89% of Bitcoin's life and held it till today, you would be in profit. We can see that Bitcoin's compound annual growth rate compared to gold, S&P 500, NASDAQ, and TLT, the compound annual growth rate of 117% is absolutely destroying these other assets. That 5-year Sharpe ratio of 1.05 also means that Bitcoin continues to be a positive addition to many people's diversified portfolios. Now, if we just look at the Bitcoin network, it tells us one story. But of course, we need to go look at the on-chain metrics. Will Clemente and the team over at Blockware do a fantastic job every single week. Let's dive into the metrics that they shared this week. Will points out that the miners are very pro-cyclical forces in the Bitcoin market. He says that they hold their Bitcoin in the bull market and place orders for more machines that have a delay from when they were bought to when they're plugged in for a variety of reasons, including manufacturing and shipping times, and building out shelf capacity for the machines to operate. Due to this, hash rate's cyclical peak has historically lagged the peak in Bitcoin's price. Then he goes on to show the Bitcoin mean hash rate, the 14-day moving average, and he says the machines continue to be plugged in at an aggressive rate throughout the late 2021 and into early 2022, but the Bitcoin spot price has declined by roughly 70% since then, and so there's a new variable adding to the compression, which is the increased energy costs driven by supply chain issues. Will's been tweeting about this for a while. If we go back to June 18th, what we see is that he said lower Bitcoin price, higher hash difficulty, and higher energy costs have put serious pressure on miners' margins. Hash price is now its lowest since October of 2020. The hash ribbons have crossed, indicating machines unplugging and miners sending Bitcoin to exchanges. Then we can go take a look at the hash ribbon, and what we see is the juxtaposition of the 30-day and 60-day moving average of hash rate to create a proxy for momentum moves in miner dynamics. Next up, we can see that the miner net position change shows that miners, they were selling some of their Bitcoin. It's cooled off a little bit, but that doesn't mean that they won't pick up again. As we can see from this chart here, the public market has punished these Bitcoin miners, and the thought process is that if Bitcoin's price was able to recover, these miners likely would follow as well. It tends to just be higher beta Bitcoin exposure, but history may only serve as a guide, doesn't necessarily predict the future. I hope that you enjoyed these weekly updates on Bitcoin. I learned a lot by putting them together. It's also great to have people like Will and the Blockware team doing so much analysis on the on-chain metrics and looking at things like miners, exchanges, and the various market participants. If you're interested in Bitcoin, you can head on over to FTX US. FTX sells Bitcoin at sometimes as much as 85% cheaper than their competitors on transaction fees. If you're interested, go into the link in the description, click on it, sign up, and see what it's all about. FTX US, they continue to work on getting best pricing, they're adding things like digital stocks in beta, and they continue to try to innovate around all sorts of financial markets. That's it for this week. I hope that you guys enjoyed it and learned something. I'll see you guys next week.